Literally nobody is talking about what is really happening with mortgage defaults in British Columbia. The media is making it sound like a complete crisis, but are they really telling you the full story? A recent article out by the Globe and Mail suggested that mortgage defaults are rising across the board in the province of Ontario and other areas of the rest of Canada. And this is technically true. Delinquency rates or missed payments over the course of 90 days came in at the second quarter of 2024 at 0.192%. That's up from 0.14% in 2022, which was a record low, and 0.17% in 2023. Key indicators that the problems are getting worse with delinquencies in not only auto loans, but credit card loans are indicating that people are absolutely struggling and it is getting worse. But the question for you is, are we really in a crisis, or is the media simply fear-mongering to get you to read their articles and get the clicks so they can pay their advertisers? When you actually dive into the numbers, it actually tells a much different story, not only across Canada, but specifically for the people in the province of British Columbia. While mortgage defaults are technically rising across the board in multiple provinces, there is a lot more to this story. And if you hang around to the end, I'm going to let you know exactly what you need to know and why. You only get one chance to buy or sell your next home. Let's get it right. So what's the problem and what's causing these mortgage delinquencies in the first place? Well, I think the big elephant in the room, obviously, is what has happened with mortgage rates over the course of the last 5 years. According to recent data, over 1.2 million Canadian homeowners are expected to be renewing their mortgages in 2025. Now, the glaring problem with that is current mortgage rates or discounted 5-year mortgages can be found for just over about 4%. One of the reasons this is a problem is mortgages 5 years ago, those very people that are renewing their mortgages today could get a mortgage at that time for roughly about 2.5%, meaning they are now renewing their mortgages at an increased rate of about 1.5%. To put that into perspective a little bit, for every quarter point of a mortgage increase, the average consumer is paying roughly about $15 more per month on every $100,000 borrowed. A 1.5% increase, therefore, is $90 extra for every $100,000 borrowed. This means for someone that theoretically borrowed, let's say $600,000 5 years ago, is now going to be paying up to $540 more per month to have the exact same loan amount. Even worse, the coming year is going to get worse for people because at that time, roughly about 5 years ago, we were entering into the COVID era where mortgage rates rapidly dropped and remained lower than where they are today for a period of roughly about 2 years. In fact, at its very low, you could find a 5-year fixed mortgage rate for about 1.39%. The real test is going to be for these people who are coming up for mortgage renewal who have these ultra low rates, which at the time were as low as 2.5% below what the going rate is today. Because their mortgage renewal amounts are coming up at rates that are almost double to triple what they originally agreed to. So of course, the big test ahead is how can these homeowners actually handle this payment shock when it comes to fruition? But while these higher rates will put pressure on homeowners and their monthly finances, the numbers coming out regarding BC suggest that BC homeowners are still managing. And this gets into what the media isn't telling you and why their fear tactics help buy your attention. You see, media thrives on scare tactics. Anytime they write the word mortgage crisis, that equals more clicks, more views, and more ad revenue. That's all part of the complete package to get people to read or view your content. And hell, you might have even clicked on this video because of the packaging to get you into it. That's what good marketing does, but that is also fear-mongering. These fear-based headlines can make people hesitate. They can hesitate to buy, they can hesitate to sell their home, or they can hesitate to invest their money. But the problem is you can make data say absolutely anything you want. You can pick and choose what pieces of information you provide to the public to help tell your story better. So while mortgage renewals in British Columbia are definitely going to be a challenge moving forward, is that the real story? And are mortgage delinquencies in British Columbia really as big of a problem as the media is making them out to be? Let's talk a little bit about British Columbia versus the rest of Canada from the Canadian Mortgage and Housing Corporation's Q3 statistics of 2024, the most recently available information regarding mortgage delinquencies. BC's mortgage delinquency rate is 0.16%. And I want to put that into perspective for you a little bit. That is 16 out of every 10,000 homes in British Columbia are having challenges paying their mortgage and have defaulted or been delinquent over the course of at least 90 days. In Vancouver, the number is even smaller at 0.1% or 14 homes for every 10,000. Now, compare that to other provinces like Saskatchewan, where they're seeing about 67 homes per every 10,000, or Newfoundland, about 48 homes per every 10,000. BC is actually one of the most resilient provinces in all of Canada when it comes to mortgage delinquencies. While defaults of mortgages in BC are actually at their highest level since 2021, BC is still at a fraction of what is happening in some of the other areas of the country. So the question is it even really that bad? And are we actually in a full-blown crisis? And of course, are things about to get way worse than they are today? Well, there's three reasons that prices have remained resilient in not only the Lower Mainland, but also British Columbia that have helped us avoid a complete mortgage disaster. The first was the mortgage stress test introduced in 2018. And don't get me wrong, everybody hated the mortgage stress test when it was introduced because it absolutely crushed people's affordability, meaning they could not qualify to buy homes that they once could prior to it coming in. This is where to qualify for a mortgage, you actually had to qualify at a rate that was at least 2% higher than what you could actually afford. And the reason this was introduced was to help deal with potential mortgage shock should the rates ever skyrocket, exactly what happened in 2022. This stress test, forcing people to qualify at higher rates, insulated them against rate shocks. At the time, people called it unfair, but now it's the reason that many homeowners can actually afford to renew their mortgages. The pain is absolutely real for these mortgage increases, but most homeowners were already tested for these higher rates. Remember what I said at the beginning of the video that current mortgage rates are about 1.5% higher than where they were back 5 years ago? Well, that means that those people renewing are actually already stress tested to be able to afford their new current rate. But there's actually two other occurrences that have helped protect homeowners from being delinquent on their mortgages in BC. At the same time, when the mortgage stress test was introduced, there was also a critical detail added that no mortgage borrower needed to requalify for their mortgage when they were renewing their mortgage with the same lender. This means that regardless of what happened with the price of the home that they bought, or regardless of what happened with the mortgage rates, or even regardless of their employment situation, change in family situation, it doesn't matter. Those people renewing their mortgages didn't have to reprove things like income, jobs, or credit worthiness to be able to renew their mortgage with an existing lender. Now, of course, this is only true if they weren't making any changes to their mortgage, but if they were just renewing on the same terms as originally agreed to at today's updated rate, they didn't have to provide any information to requalify. And the third comes from the Canadian Mortgage Charter introduced in 2023. One of the problems people had when renewing their mortgage was that they were kind of stuck with their original bank. Therefore, they might not have been getting the most competitive rate because their bank knew that they couldn't go anywhere else to get a mortgage because they had to requalify with a new lender. But the Canadian Mortgage Charter introduced a change that meant people didn't have to requalify if they had an insured mortgage if they wanted to move their mortgage over to a new lender. And this made the rates and the banks much more competitive to try and get that business. The good news for the mortgage borrower in that case meant they had options and they weren't limited to just the bank they had originally chosen. And because of this meant less forced sales, less people having to sell their homes because of having to requalify. And these three factors have really softened the blow of all of the rate changes that we have experienced in the last 5 years. This is one of the many reasons, in fact, that prices in the Greater Vancouver Real Estate Board year over year are actually up rather than down. Arming you with this information is intended to make sure that you don't get caught by media headlines, clickbait titles, and fear-mongering that is designed to get you to not only pay attention, but also to make you hesitate in whatever your plans may be. You want to be informed, but not fearful. While it is true that mortgage defaults and delinquencies are rising slowly, the British Columbia market is still holding strong. Fear-based news makes people panic. It makes them freeze and it makes them stress out. You want to understand the data, think critically, and plan ahead for the future. One of the key pieces of advice that I can give you, however, is if you are worried about your mortgage renewal, it never hurts to start planning early and collecting information so you can make the best decisions for your own personal situation. If you found this video useful, or if it helps settle some nerves, or you think there's someone that you know that may benefit from getting this information, please consider hitting the like button or share the video with them to make sure the algorithm shoots it out to everybody that needs to hear this message. And if you're someone that's considering buying a home, and articles like the ones we were looking at today have frozen you in your spot, this just goes to show that you need to educate yourself fully on the process of not only buying a home, but also how the market functions and what you need to know to be successful. That's why in the video coming up next, I'm going to share with you my complete rundown, my exact presentation that we give to home buyers just like you when they are looking to purchase their first home or a home in British Columbia. This video is designed to set you up for success and make sure you avoid all the pitfalls that we see so many people make. So I'll look forward to seeing you over on the next video. Cheers.